up about 30 odd points. The Sensex is up about 76 points as well.
The market's in the red now for all the benchmark indices.
So recovered quite a bit just on the flat line with minor gains when we talk about Nifty 50, 19,581.
Flitting between positive and negative, 19,587 is what we have.
The index has moved in just about a 100-point range and it's facing resistance at that 20-day moving average, which is around 19,640. Banks did well. Today was the weekly expiry for the Fin Nifty.
You're watching us here on Markets Today. This is a show where we track about 6 hours of day's trading action in 5 headlines. Let's talk about those headlines because it was a rather range-bound trading session with the Nifty Bank outperforming, but the Midcap was underperforming. The first one is the Sensex and the Nifty ending with marginal losses after a range-bound session. The Midcaps bucked the trend. The Nifty Bank also ends in the green. We had Hero Motocorp netting a heady over 25,000 bookings for the Harley-Davidson X440, with over 65% of the bookings coming in for their top-end variant. The stock revs up on that robust show. Maruti Suzuki approves issuance of shares on a preferential basis to Suzuki Motocorp for acquiring 100% stake in the Gujarat plant. Maruti's chairman R.C. Bhargav says Suzuki's shareholding is likely to increase and hit more than 58%. Hindalco reports a 58% decline in net profit on a year-on-year basis. The margins fall to 7% versus 15%. However, there was a 2% increase in the revenue for the same period. The stock tumbles over 2%. Gland Pharma gains over 20% on reporting an all-round beat in their first quarter. Tata Chemicals drags after its net profits slipped nearly 12%. Indigo Paints falls nearly 1% despite reporting a 58% increase in their profit on a year-on-year basis. Let's tell you what we have lined up for you in the show today. It's a back show. We have Harsha Upadhyay, who gives us the market opinion, Chief Investment Officer at Kotak Mutual Fund. Big corporate voices, we have the biggest of them all in the auto space. R.C. Bhargava, the Chairman and Managing Director of Maruti Suzuki. We have Sudhir Sitapati, the Managing Director and CEO at Godrej Consumer. And then we have a bunch of other market opinion coming in for you too. Let's talk about the day's trading action itself. The Nifty and Sensex ended with minor cuts. The Nifty faced some resistance at the 20-day moving average. The Sensex fell over 100 points, while the Nifty fell close to 30 points. The broader markets outperformed the benchmark indices, with the Midcap index gaining about 0.25%. The Nifty Bank too outperformed almost 125 points in terms of gains coming in for that index. Prashant Nair joins in with the day's market action. Prashant.
Well, it was quiet and sideways for most of the session, and that's how we ended. No real fireworks even in the last 30 minutes of trade. No 3 p.m. move as we've gotten used to. The change will come up on your screen on the Nifty. The Bank Nifty, a little better. I mean, the Bank Nifty did better than the Nifty. It was opposite of what we saw yesterday, where the Nifty did well and the Bank Nifty sulked. Mid-caps and small caps, a steady 0.25% gain higher. I'll get to the broader markets and stocks which did well there, but I have to say that list of stocks which went up on volumes exceeds the list of stocks which went down on volumes, even though overall NSE market breadth was about 1:1. But let's start with the Nifty, the large caps. SBI Life, Hero and Cipla were the gainers. On the losing side, you had names like Adani Enterprises, Power Grid and Hindalco, which were under pressure. Broader markets now, that's where the action has been once again. So these pharma names, Gland, Kaplan, consumer name like Imami, financials like Indian Bank, Manappuram, Satin Credit Care, names like Angel One, RateGain at one point was up 15. It ended up about 6 or 7%. These power smaller companies, Skipper, Genus Power, Inox Wind. Then you had industrial names like Praj, ITD Cementation, auto ancillary name like Talbros Automobile, 16% move, big one. Sangvi Movers continues its run-up, very strong numbers recently, and Serra Sanitary Ware as well. There were cuts coming through as well. Names like Zomato and PB Fintech, which have done well recently, pulled back. There was Max Healthcare reacting to results on the downside. Graphite India, HBL Power, Paras Defense, Intellect Design, Med Plus, Borosil Renewables, amongst many others. So that's the broader market action for you. As I said in the headline indices, quiet day. All eyes will now be on the US session, US market session. Thursday, not tomorrow, will be the more important day because you get the RBI decision that day during our sort of trading hours, and then later in the evening, you get the US CPI. In a way, markets, not just here, globally, a bit on the hold. Back to you.
All right, Prashant, thanks a lot for that. In fact, Harsha Upadhyay, the Chief Investment Officer at Kotak Mutual Fund for Equities, also saw that he's seeing some stability in auto volumes in particular. He said that the move in the banking stocks hasn't been in line with strong earnings reported by the space, so maybe, perhaps there's some room for more. Let's hear him out.
Consumption basket, the premium end has remained quite resilient all through the COVID period as well, I would say. And even post-COVID disruption, we have seen that basket doing relatively better than the rest of the consumption basket. The overall automobile sector, as well as, in particular with two-wheelers. Now that we have seen new product launches, now a little bit of stability on the volumes. And as we know, most of the manufacturing segments, including two-wheelers, will gain from moderating inflation on the raw material side. While, as you rightly mentioned, the results have been very, very strong, we have not seen commensurate stock performance, since most of the institutional investors already have kind of a reasonable exposure to this segment. While margins are definitely going to look a little softer going forward, we still believe that the earnings growth for this basket is going to be better than the average market earnings growth that we would see.
All right, so that was some market opinion coming in from Harsha. Let's move on. Let's talk about Hero MotoCorp. That was among the top Nifty gainers today after the company received over 25,000 bookings for the world's cheapest Harley-Davidson motorcycle. They said that nearly two-thirds of their bookings actually came in for the top-end variant, which costs about 2.7 lakh rupees a pop. Sonia Shenoy joins in with the details of that one. Sonia, there is serious appetite for the Harley-Davidson.
You know, the overarching theme really is that the super premium luxury segment is doing very well. A couple of weeks ago, if you remember, Bajaj had a fabulous response with their Triumph bikes as well. And Hero is no different. So here are the numbers. Hero Motor received almost 26,000 bookings for the new Harley-Davidson X440. And 65% of those bookings are for the premium end, which is the top-end variant, which is priced at almost 2.7 lakh rupees. Now, Hero will start production of the Harley-Davidson X440 in September of this year, and deliveries will begin in October. Now, this, there's a very strong response across the board in the two-wheeler space for the premium end of the market. But if you look at the stock performances, right, Hero MotoCorp today is playing a bit of catch-up to peers like Bajaj Auto and TVS Motor. So in 2023 so far, Hero is barely up about 10%, while Bajaj and TVS Motor are up 20 and 23% respectively. And also the valuations of Hero MotoCorp, historically they've traded at about 16, 17 times. But right now, Hero is much more attractive compared to Bajaj Auto, trading at sub 15 times FY25 PE, while Bajaj trading at almost 17 times. The next thing to watch is Hero MotoCorp's earnings. It comes out on the 10th of August. It's been a weak quarter for them. Volumes have declined 3%. The rural market has not recovered, in full force. And margins as well could be under pressure. But for the stock, if you look at it, it's still about 6% away from its 52-week high. So maybe if there's any positive trigger in the earnings, perhaps there could be a further climb, because some of these pockets, like the premium luxury end of the market, is doing quite well for them.
All right, the luxury market doing extremely well. We saw that in the numbers of Ethos watches yesterday as well, where the average sales price went up, and we saw the stock rally almost 11-12% by the end of yesterday's trading session. But let's talk about the third headline. Maruti Suzuki has approved the issuance of shares on a preferential basis to Suzuki Motor Corp to acquire 100% stake in the Gujarat plant. Maruti's chairman R.C. Bhargava says that Suzuki's shareholding is likely to increase by just under 2%. As things stand, Suzuki owns 56.5% stake in Maruti Suzuki. After the issuance of these preferential shares, Suzuki's stake will rise to about 58.3%.
I believe the calculations show that Suzuki will go up to something 58 point some percent. Ajay, exactly.
58. If we look at the current calculations, exact will be decided when we have the relevant date, but as per current calculations, 58.28.
But this will not be the final figure, because the final figure will be decided on the basis of the book value of SMG and the Maruti share price on the appointed date, which will be when we decide, the board decides to call the AGM.
All right, and the government's move to restrict the imports of laptops, tablets and personal computers has cheered domestic manufacturers, most of them including the likes of Atul Lal of Dixon Technologies. He is actually of the firm view that these curbs are a positive step in supporting electronics manufacturing. He did laud the government for its decision Atul Lal said that the Indian domestic industry will take just about 6 to 8 months to ramp up production and meet demand. Let's hear him out.
Specifically responding to the laptop and the IT products being covered now under licensing. So there are various viewpoints to it. But from the manufacturing industry, we are of a firm view that this again is a positive step. Please appreciate the Indian domestic industry, manufacturing industry, will take just 6 to 8 months to ramp up the production. And in the intervening period, the government is coming up with the requisite policy interventions to ensure that demand is met, either through imports or enhancing local production. Please be rest assured, the industry has adequate bandwidth to manufacture at a cost which is comparable to the global manufacturing companies. It's also ensured through the IT PLI 2 that the requisite value addition will keep on enhancing year on year. And I'm very sure that in 3-5 years, you'll have some Indian solutions coming out.
All right, time for a short break now. Stay tuned. On the other side, we will get you all the other headlines that we're trying. Welcome back. You're still with us here on Markets Today. A day where there were range-bound moves on the frontline indices, but individual stocks were abuzz with a lot of news. Let's talk about those news pieces itself then. Hindalco was the one which was slumping about 2.5% in today's trading session after reporting a mixed bag for the first quarter. Net profit met street expectations, came in at 600 crore rupees, but the company reported a miss on their revenue and margins. Nigel joins in with the key details of that one. Nigel.
Well, the metals pack wasn't in favor today, but actually Hindalco's operational numbers were better than what the street was working with, both on the aluminium as well as the copper business. Let's address the aluminium business first. Out there, you had the EBITDA number that was down closer to around 35% on a year-on-year basis, but it was still higher than what the street was working with. Kotak estimates as well are up for you on the screen, and the number they delivered was much better. The upstream business, yes, there was some bit of a compression that we saw out there, but that was on expected lines. In the downstream business, which is a smaller part of their business, there was an actual improvement on the absolute EBITDA as well as on the EBITDA per ton basis. The copper business as well, they delivered a number that was much better than what the street was working with. Came in excess of around 500 crores at around 531 crores odd. The street was working with a number of close to around 450 crores. We were aware that there was a maintenance shutdown for the past quarter, but in spite of that, the sales volumes were higher, telling you that maybe they had some kind of inventory that they pushed through. The net debt number went up on a quarter-to-quarter basis, but that as well was on expected lines because the capex was higher and the working capital as well did get a little bit stretched. Back to you.
Thank you, Nigel, for that. Let's move on to the fifth headline for the day then. Gland Pharma gained a whopping 20% after reporting a beat on all parameters for the first quarter of this fiscal year. The company has witnessed strong sequential recovery in margins and net profit. And after the big drubbing that the stock had seen, there is a bit of a relief rally that we saw. Mind you, despite a 20% rally today, the stock is still about 40% away from its 52-week high. Ekta joins in with the key numbers of Gland Pharma. Ekta.
Thanks for that. Well, yes, Gland Pharma has seen quite a significant rally in today's trading session because of the Q1 recovery that they have shown. So revenue has grown around 41%. They have an EBITDA which has improved all the way to levels of 24%. The street was anticipating around 21%. On an adjusted basis, the margins have done better as well. And the profit has come in at over 190 odd crores as well, much better than what the street was anticipating. Now, you have to look at Gland in terms of the context of the recovery as well, because in the past many quarters, Gland has in fact reported very weak numbers. This weakness really started in the second half of FY22, where it was plagued by issues such as supply chain disruptions, price erosion in the US markets, COVID-19 opportunities dwindling. Now, that had resulted in the weakness that we saw in numbers, which really hit a trough in Q4, where the margins came in at around 21%. The profits were sub 100 crores. So they had faced multiple issues as well at, during the Q4 time, which were one-offs as well. So we have seen a recovery come through from those levels. But if you look at it in terms of a stock performance, today we've seen the stock rally around 20-odd%. It has rallied significantly from 52-week lows of over 860-odd rupees, but it is still around 35% away from its 52-week high, and it is quite a distance away from those highs of over 4,200-odd rupees, which it had hit in August of 2021. Now, in terms of valuations as well, it is currently trading at around 23 to 24 times 1 year forward. But if you look at it in terms of peak valuations, at one point in time, it was over 45 times. So for it to get back to those valuations, the street says that, maybe there needs to be some amount of sustainability in terms of the numbers, and the next couple of quarters will be key to track that sustainability for Gland.
Alrighty, thanks a lot for that. With that, let's talk about the other set of earnings that came by today. We had Indigo Paints reporting what was a very good performance, despite the stock declining today. So, will be interesting to see where it goes from here. But the good part is that the company has returned to its industry-leading growth path. Remember, it's grown 3 times the size of the industry. The revenue for the company has grown at 29%. This compares with large leaders, say something like Asian Paints or Kansai Nerolac, which has reported their numbers, have seen a growth of anywhere between 5 to 7% itself. It is basically the company's focus on tier 1 and tier 2 cities which has led to their growth, the strategy 2.0 as the management calls it. And has this 29% jump percolated all the way to the bottom line? Yes, because the EBITDA has jumped all the way up from 35 crores to 49 crores, and the net profit has seen a jump of 50% plus as well. As a result of which the street was excited at the start, but thereafter we did see a bit of a sell-off, because remember, the stock trades at 53 times 1 year forward earnings in terms of valuations as well, and sustaining of this growth is something that everyone will keep an eye out on. But that's about Indigo Paints. The other one is Godrej Consumer Products, tumbled nearly 2% after missing street estimates on most parameters. However, the internals were strong for these numbers, 12% volume growth in the India business. The reason why the stock declined was because Sudhir Sitapati, the Managing Director and Chief Executive Officer, did say that double-digit volume growth in India may not sustain for the next few quarters, and this quarter it came by on the back of favorable season rather for their household insecticide business. Let's hear him out.
If you look at our organic volume growth in India, it was about double-digit. That is probably not the volume growth trajectory of the India business yet. We used to be in kind of low mid single digits. I think it's higher than that, but double digit, I think we've gone past that pip because of certain external circumstances. I think, we are constantly looking at our primary focus, Mangalam, is volume growth. And we really try and push volume growth to the maximum possible. We hope that in H2, we will start seeing significant synergies both on the revenue line and on the cost line. The capex does about half of it is for volume growth and half of it is for efficiency.
All right, so that was the Godrej Consumer MD speaking about their quarter that went by, and importantly the outlook for the year. Tata Chemicals too tumbled close to 3% after reporting an 11% decline in their net profit on a year-on-year basis. However, revenue and EBITDA were above what the street was anticipating. The reason why the stock fell off the highs was because the future quarters don't look too good with the kind of cuts that they've taken in their soda ash prices. Sonal joins in with the key numbers. Sonal.
Thank you so much for that. Well, Tata Chemicals reported numbers yesterday. The margin picture looked better than what the street was working with, but they just conducted a conference call and they spoke about near-term challenges. To take you through the numbers, first up, revenues were up 6%, EBITDA was up 3%, margins at 24.7% was better than estimates of 23.2%, profits declined on a YY basis. This EBITDA was the highest ever for the company ever actually. The company said higher revenues came in on account of better realizations. However, volumes were impacted. Then net debt also increased on a quarter-on-quarter basis. Morgan Stanley said they reported highest ever EBITDA and it offset the weak volume performance across geographies. India and US led the beat this time around. But the company in its conference call did say that net supply of soda ash has increased post-China reopening. There is no domestic China demand and that's why they are dumping goods in the global markets. Oversupply in the soda ash market has come in earlier than what they expected. Domestic supply was also impacted due to higher imports at cheaper prices. There have been delays by clients globally in terms of inventories as well, and globally there has been an impact there. Demand, however, remains strong in medium to long term, but short-term challenges remain, and they say short-term could be anywhere between 9 months to 15 months. They say we will have to see how demand in China pans out because real estate demand there is very weak. So it is a wait and watch mode for Tata Chemicals in terms of soda ash pricing, and that is something the management is worried about as well.
All right, the other stock that did well today was RateGain Travel Technologies, rallied almost 6% after its first quarter net profit tripled on a year-on-year basis. The revenue also came in higher by almost 80%. We did have the management join us today, and they said that they're confident about beating their own FY24 guidance. Let's hear them out.
If you take cues from Q1 and how we performed against the fiscal year target, so I'm pretty confident that we will beat the guidance that we gave. What the delta would be, I don't know. I can tell you in terms of overall industry trends, there is a lot of tailwind that's behind us given, the attitudes of people have changed. The cash on books currently is about 350. We've come out with a proposal to do a QIP for another 600. So on the M&A side, as you know, we are very, very active. We did the Adara acquisition and that's gone extremely well for us. So we are an acquisitive company. We're looking at targets in these areas where we operate.
All right, with that, let's move on and let's talk about some more earnings. ITD Cementation hit a 52-week high after reporting an operationally strong quarter with their highest ever quarterly revenue. The company reported a 74% jump in their profits on a year-on-year basis as well. Vivek Iyer joins in with more details on that one. Vivek, tell us about ITD Cementation.
Well, that's right. Very good operational quarter from ITD Cementation as far as Q1 is concerned. Good execution trends aiding the top line. So, revenues jumped up almost 67% on a year-on-year basis, coming in over the 1,830 crore mark. Now, also, EBITDA jumped up almost 80%, telling about the effectiveness as far as cost controls are concerned. And on the back of that, margins too, saw an increase of over 60 basis points on a year-on-year basis. Profitability higher by 73%, both year-on-year as well as sequentially. There has been a significant improvement in all of the parameters as far as ITD Cementation is concerned. Along with that, the consolidated order book too stands quite strong. Over 18,500 crores, the order book that the company is currently sitting on. And in Q1 itself, the company secured orders of over 247 crore. In fact, looking at the P&L, the PAT would have been even higher if not for the increased higher interest as well as depreciation costs. So very strong operational quarter, which explains the kind of up move that you're seeing in your stock today.
All right, Vivek, thanks a lot for that. With that, we're out of time on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC TV18 for all the other news and updates.